What is happening, bulls and bears? Zillow missed the housing market drop. Let's talk about how they missed it, why they missed it, and more. Let's get into it. Please like and subscribe if you like these updates. Housing market update today. Let's talk about Zillow. First, let's go back to a few months ago and what Zillow had put out there in an article. And this was an article put out in March, so just a few months ago, and it was put out by Fortune. The housing market isn't normalizing. Zillow predicts the wildest home price swing still awaits. So Zillow, yes, they predicted that home prices would accelerate or go upward at an accelerated pace instead of predicting or telling us what actually happened, and that was home prices actually fell month over month. Now, home prices are still up year over year, but if you look at the month over month prices actually fell. So will Zillow be right in the end of this year? Will home prices skyrocket upward? Well, it's very unlikely when you look at mortgage rates, when you look at the plunging savings rate of the US consumer. So how can a company that specializes in real estate get it so wrong? Well, it's in their interest to tell people that the market's going to go up because that's going to be more business for them, right? So it's very rare nowadays to find someone in the real estate industry, whether it be a lender, a real estate agent, a real estate listing company. It's very rare to have them acknowledge that the market is weakening or that it's going to continue to weaken. And God forbid, they're unlikely to tell us that prices are going to go down, because that's like shooting themselves in the foot, right? So most of you know this, but isn't it interesting how a lot of people drank the Kool-Aid and went out and rushed out and took on the maximum loan that they could get qualified for to buy a home because of predictions like this. And also you see misleading headlines like this. And what does this headline make it look like? It makes it look like the home prices are still accelerating. Home sales fell for the 6th month in a row, but prices kept rising. Well, prices kept rising if you look at last year and what we call year over year numbers. But when you look at the summer months from one month to the next, home prices actually fell. And this article does point this out, but in a very subtle way. It says the median home price was $403,800 in July, up almost 11% from a year earlier, but lower than the record high reached last month. So home prices fell from June to July. That's very rare. In fact, we haven't seen that month over month price decline from June to July in over 10 years. That's correct. Home prices have not fallen from June to July in more than 10 years. So again, we're looking back over 10 years now, back to the financial crisis time period. Now, technically, many would say and agree that the financial crisis began at the end of 2008, but it went on for a few years as far as the housing market goes. Prices didn't start recovering or ticking up until about 2012, 2013. So this puts us in that time frame where home prices were still in a recession. And yes, millions drank the Kool-Aid and are still buying homes this year. People are still trying to get mortgages. People are still trying to qualify for the biggest mortgage possible, and they're leveraging themselves to the max because they still believe home prices are going up when actually they're dropping. Because what are they doing? They're looking at the year over year number, right? They're looking at the year over year number instead of the month to month number. So of course, at the beginning of a price correction, if you look back compared to a year ago, home prices are still going to be higher because this is just the beginning. So yes, home prices are still higher than they were a year ago. But in the coming months, I think before the end of 2022, we're going to see year over year price declines. And that's my prediction. Year over year price declines before the end of 2022. Now, let me put an asterisk on that because there could be some massive intervention. There could be some massive freeze again on foreclosures. Remember, we still haven't exited the foreclosure rescue program that began in 2020. We still have over 400,000 people still in that program. How much further would home prices have dropped if it weren't for the rescue programs, right? The moratoriums. Home prices could be negative year over year right now. We don't know. And that's the difficult thing with the intervened market or such intervention, unorganic price growth. unnatural market propping has created this mess. And then actually here just a couple days ago, Zillow had to correct their mistake or acknowledge what was really happening. In another article out of Fortune, Zillow, these 30 housing markets saw falling home prices in July, but don't call it a crash. So now they're saying, okay, it's not a crash. It's not a crash yet. Yes, home prices fell in many cities, but it's not a crash. So they're kind of covering their tracks. I mean, that's what I see. That's what it looks like to me. Please let me know what you think down in comments. And also, we're seeing Zillow backtrack on their forecast. Instead of the wildest price increase like they predicted back in March, now they're saying the following, and this is just a few days ago. On Thursday, Zillow once again revised that forecast between July 2022 and July 2023. So this is a 1-year prediction ahead or forward prediction. Zillow now expects U.S. home prices to rise, but only 2.4%. So we went from the wildest price increase ever to now only a 2.4% increase. And again, they're talking about year over year numbers. That's down from the 7.8% forecast the company published just a month earlier. It also marks the 5th downward revision since March. The 5th downward revision. So basically, they've been wrong 5 months in a row. That's why they have to go back and correct themselves. Oh, now it's going to be home prices only go up this much. Home prices only go up this much. So you see this trend of constant revisions. And we see this in many different places. Even the official numbers that comes out of the government, they go back and they revise these numbers. Why can't they just wait to see what the actual numbers are and then just tell us what actually happened? And even then, it would be a wrong number. It would be a manipulated or cherry-picked number. For example, the inflation number, they don't count food and they don't count housing and they don't count energy, even though that's what most people have to buy. Every month they have to spend something on those 3 areas. So I guess if no one has to live anywhere, they could just live out in the woods, then we shouldn't count housing. And if nobody uses energy, nobody puts gas in their car, okay, let's not count energy. So the inflation numbers are very, very wrong. We know on this channel, we visited that and discussed that many times, that it's about double, and in many cases more than double of what we're being told as far as inflation. Last week it was 8 point something percent, or last month rather, and we know that the truth is about 16% and even higher. And if you ask most people, I think they would tell you that it's even higher than 16, 17%. And one of the cities that saw the biggest price run-ups over the past 10 years or so was Phoenix, especially with all the California buyers. Home prices are now falling in Phoenix. Here's what to expect Phoenix home prices mean for buyers and homeowners. And even Zillow is reporting the price drop, showing the typical home value in Metro Phoenix falling 2.8% from June to July, putting the median home price at just under $471,000. So bottom line, folks, is be careful out there. Don't be the one to catch a falling knife. If you're, of course, a cash buyer, then you may not have to worry as much, because if you buy a home for cash, then that already reveals that you can withstand a further downward housing market, and prices drop further, you're going to be okay because you paid cash for the house. You may not feel the best, but you won't have to worry about missing your mortgage payment and not having the home equity line of credit available because you paid cash. But most people don't pay cash, and actually about 25% of all home sales right now are to people with all cash, 100% cash. What does that mean? 75% of the people have to take out some sort of mortgage and go into debt to buy a home. So if that's you, be careful if you're thinking about buying a home. I hope you guys like this housing market update. Thanks for being here. Be well, everybody. Stay safe. Keep stacking. Bye for now. Peace.